Good, good morning, class. Welcome to another session of Principles of Accounts. I hope we'll all enjoy today as we're going to look at the double entry system for assets, liability, and capital. Okay, class, at the end of this lesson, I hope you'll be able to explain the recording and layout of financial transaction using double entry system, explain the meaning of debit and credit in bookkeeping terms, state the rule of the double entry system, and to provide work example to illustrate the use of these rules. Let's enjoy. Good day, class. Today we'll be looking at the double entry system. Now, can anyone define the term double entry system? Me, miss. Go ahead, lightning bolt. Miss, the double entry system is a system where each transaction is entered twice, once on the debit side and once on the credit side. You are correct, lightning bolt. And just to add something extra, an account is the part of the double entry records containing details of the transaction for a specific item. An account that is placed on a page is divided into two halves, one side called the debit side and the other called the credit side. The question is, which side is the debit side and which side is the credit side? Me, miss. Go ahead, Charisma, tell us the answer. Miss, the debit side is the left hand side of the account in the double entry and the right hand side of an account is the credit side. You are quite correct. Now let us look at a sample of the next slide. The title of the account is written here at the top. Then we have the detail here, the date on your left hand side, the dollar figure showing the amount, the detail on the dollar figure also on the right hand side. The left hand side on this page, this is the debit side, and debit is abbreviated by using DR. The right hand side of the page, this is the credit side. Credit is abbreviated by using CR. In everything there is a rule. There is a double entry rules for accounts. Accounts is recorded like this: asset, liability, and capital. Asset, an increase in an asset you debit, a decrease in an asset you credit, an increase in a liability you credit, a decrease in a liability you debit. Capital, an increase you credit, a decrease you debit. The double entry rules and the accounting equation. To increase each item of asset you debit, to decrease each item of asset you credit, to increase each item of liability you credit, to increase each item of capital you credit, to decrease each item of liability you debit, to decrease each item of capital you debit. Let's look at the first example. Say paid cash $200 to buy machinery or to buy lunch. The double entry for this transaction would be as follows. Cash goes out, a credit entry in cash account. Machinery or lunch comes in, a debit entry in the machinery account. Example 2. You took $500 out of the cash till of the business and paid it into the bank account of the business. The double entry for this transaction would be as follows. Money comes into the bank, a debit entry into the bank account. Cash goes out of the cash till, a credit entry in the cash account.